Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down into bite-sized pieces. Today, we've got some serious topics to talk about. And what we're going to go over is just one piece, which is an interview with Robert Kiyosaki by Patrick Bet-David from Valuetainment. This is a pretty in-depth article. And we're going to go everything from how the Fed protects the rich to the repo market collapse, how pensions are due to fail within the next 6 months, how the shadow banking system is in play, and how everything could just lead up to just a worst case scenario potentially, and what I think could also happen on the positive side. So let's jump into today's article, but first let's hop on over to see what happened with the market. So today we've got Bitcoin holding strong, actually 72.31, and this is on we are on Saturday at 4:40 p.m. It is April 18th, I believe. So yeah, Bitcoin has finally breached the 7,000 barrier, which is a point of resistance. So if it can hold it over the weekend, we're looking pretty positive. Ethereum's also a huge jump, over 7.5% right now, but it's been over 8%. At 184, XRP 19 cents. Tether, Bitcoin Cash, Bitcoin Litecoin, Bezos, and Tezos taking the number one spot as far as the big jump, as far as an 11%, and they are doing an amazing job. So let's see how that holds out for the rest of these months coming up. So let's break into this this interview with Robert Kiyosaki. Now I did another one. It was from London Real, and Robert Kiyosaki was there. Pretty doom and gloom. And on this one, he goes a little bit deeper as to what it all means. And it was a long interview. It was over an hour. So what I did was I just broke it down into the 5 main parts, and it only covers 6 minutes. So let's just take a listen to the first part here, where he talks about how the Fed's protecting the rich and how I can see it in my own business. Here we go.
The Fed, in my opinion, is a criminal organization because its mandate is a lie. It's not here to protect you and I. The Fed protects the rich. Nothing wrong with it. I understand. You got to have your association. You know, the AMA protects doctors and the Fed protects the rich. I understand. I just chose to be on the side of the rich, so I like what they do. So if I read in 83, Grunge of Giants, and suddenly I can see this happening. So this is the Dow. It goes up. That's 2000. That was a dot-com crash. 2008. Subprime crash. This is 2020. And the question is, how far is this crash going to go? And this is my point here. I think the coronavirus is to cover up this. And I'm probably good. If I'm dead tomorrow, you'll know why. It's because I was on your program.
That's pretty funny. So, but the serious topic is that, yes, that is what it seems like the Fed is supposed to do. Now, there was a huge stimulus package that was just passed recently for Americans. And if you're outside of America, hello to all my Canadians, Mexican, Australians, Europeans, Middle East, Africans who are watching the channel. I appreciate it. But here in America, we have a stimulus package for the individual, which is $1,200, which is one time. Now, they're working on another stimulus package to get $2,000 per month for 3 to 6 months, I believe. I know Canada has something going on, as well as Australia, because I read the comments section. That's great. The problem is that there was another part of the stimulus package, which was for small businesses. And there was two types. There was the Payment Protection Program and the Disaster Loan, the EIDL. Now, the Paycheck Protection Program, that was a lot of money. That was like $350 billion. Unfortunately, what happened with that is that is all gone. After about a week and a half or 2 weeks or so, maybe even less, yeah, it all got snatched up. So I and my wife also, we put our paperwork in on that day. Actually, we filled it all out. Part of it was online. The other part we turned into our bank, and it was like within the first 12 hours was open, and we haven't heard anything yet. Now, unfortunately, I can see why that happened because of this quick little article, and it talks about the financial fallout from the coronavirus pandemic has already made a multi-billion-dollar relief fund run dry. The U.S. or the SBA announced on Thursday that the Paycheck Protection Program would no longer be accepting applications earmarked for small businesses. That's the key point here, small businesses. The program, which is approved by Congress to send $349 billion lifeline to American restaurant owners, merchants, and other small businesses, is out of cash. So here's the problem with how that ran out so quickly. So although the fund is focused on helping companies with fewer than 500 employees, major corporations as well as high net wealth individuals are reportedly recipients. So the big thing is, for this one, it's under 500 employees. Now, there's another program for them above that, but what they did, and it just says right here, Wall Street Journal reports that Ruth's Hospitality Group, leading publicly traded restaurant company, revealed in a securities filing on Monday that it received $20 million from two small business loans on April 7th. Ruth's, which has over 5,000 employees, is one of the first large corporations to receive the SBA funding. And he says, headquartered in Winter Park, Florida, Ruth's, the largest fine dining steakhouse company restaurant. In order to qualify for the SBA loans, Ruth's and large hotel operators apply for each property separately to meet the 500 worker cap for emergency cash. And so that's how it goes. So if you have a large corporation, you just break it all up, and then you get loan, a loan, a loan, a loan, a loan, and off you go. So smaller types of businesses who may not have the resources and the time and the know-how are going to be left out in the cold. So we're going to see a lot of closures and a lot of unemployment. So that's how I see it. Now, this is a comment from Brad Close. He's the president of the National Federation of Independent Business, and he states, America's small businesses are on the brink, trying desperately to keep their doors open and support their employees. We've been hearing from our members every day, worried the billion lending program would run dry before help gets to them. Today, their worries became a reality. So that is essentially what is happening in a nutshell. And let's jump back here. So that was the first part. The second part is you can see here that Robert is holding up a diagram, and he actually has it reversed because of the way that looks like this is a Zoom meeting appears. And what he's holding up is the same type of graph that we actually showed a couple days ago. And it took a look at the 2000-2001 dot-com bubble or crisis that collapsed and burst, 2008 housing crisis, which also popped, and now we are up here, 2020, in the coronavirus, essentially financial downturn. So we can see what happened here. Everything in 2000 went up and up and up, then a big drop off the cliff, and then everybody was like, oh, that's the worst is over, and it climbed a little bit, and it dropped even harder. Boom, ba-boom. Same thing happened in 2008. We had a big, huge, enormous run-up for our economy, up, 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 and then a sharp fall, and everybody's like, oh, it's over. And we had a small recovery, and then it fell hard, and really hard, all the way down here. Now the same thing's happening. 2008, 2020, this is a long run of economic profitability. And we're coming along, everything's looking good. And then what happened in March 12th? Huge dip. And we had a small recovery. Now, where this goes from here is anybody's guess. But if you're a TA person, correct me if I'm wrong. I'm sure you will in the comment section. But this pattern tends to play out. Looks like we have a small recovery, and potentially a farther downside is in the books, or is in play, so we will see. All right, let's get back to the interview. So now we're going to go all the way to 55 minutes and 40 seconds. We're going to skip these other three parts because they just are pretty tin foil hat stuff. So let's take a listen. And what he's going to talk about here is how the pension system in certain states and organizations are non-solvent. So let's take a listen.
And I wrote who's still on my pension. My father was 6'4", but that's pretty big for Japanese. PhD. But when he lost his pension, he became a wimp. Look, I want to let people know without money, people's spirits drain out of them. So I'll say it again, is I got my best education surfing. Every big wave surfer knows that the biggest waves come in threes. So we just got number 3. It came down in threes too in March. Boom, boom, boom. I'm predicting the next way they're going to control us is because there's no pensions. Mark my words. CalPERS, California State Pension, is broke. Illinois is broke. Kentucky is broke. 401ks are toast. These hedge funds are toast. So the question I say to people, you can be positive thinking all you want, but what's going to happen when they make the money toxic, which it already is? It doesn't buy anything anymore. That's what happened in Egypt with Arab Spring. Was inflation went through the roof on them, and that's when they started to riot. They couldn't eat. You look at the homelessness all across America. That's what happens. So the future is actually more of those homeless people I see all over Hawaii and California and Seattle and all this. And so without money, if it's not in your brain, you don't know how to create it. And that's all I'm saying to people. The Fed controls the money as well as the U.S. Treasury. And at this moment, as we speak, they're going to print 10 trillion more, 10 trillion more. And we don't know anything about money. So you can be like my poor dad, great guy, positive thinker, PhD, but when they took his fucking pension away, he turned into a pile of jelly. And that's what's going to happen, Patrick. The next crisis is not corona crisis. The next crisis is pensions. You mark my words on that. That's why the 401k was created in 1974. That's what Who Stole My Pension is about. So when I talk to all these positive thinking sons of a bitches, they're the ones who are going to turn on you when they don't have any money. That's all I'm saying.
So first I have to disagree with Robert here. Money still does buy things. I mean, let's be honest. Cash is king. So now the value of the dollar, I mean, how much is that? I saw in a comment section, somebody had talked about how they had looked at what they had bought from the grocery store this week as opposed to a year ago, and the increase in price was over 29%. I don't know what he was talking about as far as what items, but I can see that. And I've also heard reports that certain items are going up because there is a little bit of a scarcity as far as certain food items, so that makes total sense. But anyhow, let's do a quick fact check about what he had also said about the insolvency of these pension programs. So the first one, I think he talked about CalPERS, Illinois and Kentucky. CalPERS is from California. That is the pension program. And it says here, as of 2018, the agency has $360 billion in assets. That's pretty good. But is underfunded by an estimated $150 billion, with current assets below 70% of necessity to provide for liabilities. In an effort to reduce this shortfall at the end of 2016, the board lowered their expected annual rate of return on investments from 7.5 to 7, increasing the costs California cities must pay towards their workers' pensions. So that is one negative. Let's take a look at the next one, which would be Kentucky. And this was from an article that was written, how long ago was this? December 10th, 2019. It says the battle to save Kentucky's two largest state pension funds, Kentucky Retirement Systems and Teachers of Retirement Systems, continues. The plans, which support tens of thousands of retirees, remain two of the country's worst funded. As Frontline reported, the pension gamble has hit rock bottom in 2018 after years of underfunding and losing money to bad investments, placement agent fees, and a stock market collapse. And I'm sure it's not any better right now. Finally, we'll take a look at the pension fund in Illinois. This is from the Chicago Tribune, I believe it was, 4/18/2020, and it talks about today pressure builds to solve public pension in crisis. No, sorry, December 17th, 2019, 1 o'clock a.m. And it goes on to say, in fact, the funds fell a total of $3.8 billion further in debt, pushing the funds their highest combined total of unfunded liability ever of $137 billion. So, it looks like some of these funds are severely underfunded and not very solvent. So the next part he's going to talk about is, this gets a little crazy, where he talks Corona being the black swan event, modern monetary theory or MMT. And he's also going to talk about riots, and this is not an accident. So this gets a little crazy, so brace yourself.
But once a person takes their money away, like they did my poor dad, that's what I wrote about in Who Stole My Pension. Without money, Patrick, people can't function. And then they turn into primates, animals, desperate. They'll take government MMT, I call it Marxist monetary theory. UBI, Kang was going to give everybody $1,000 because we have no financial education in our schools. So we can be positive and all that, but I tell you what, right now I have brothers and sisters in their 70s. I know who is going to be their pension. It's me. So I was a dumb shit surfer. It comes in waves of threes. It happened in 2020, the peak, with 3 waves down already. It's never fallen so fast, Patrick. They're printing money to stop the Hindenburg from going into the ground. They're bailing out the rich. You know it. I know it. But now they have to come up with MMT to keep the poor and the middle class from rioting and killing each other. This is not an accident, is what I'm saying. The coronavirus was just the red black swan that Nassim Taleb talks about.
So yeah, I mean, I think that we can see the writing on the wall. Now, I can tell you this. I don't know how much of the riots and the killings and everything else, but I can tell you that if people do not get money because they cannot work because of the shutdown for the virus, and they can't get any type of cash in hand, it's going to get very ugly very quick. So that $1,200, that's as far as the stimulus package goes, that's good for, I mean, $1,200 isn't that much. I mean, it's a lot for some people, and it's not much for others. So when we start to hear about these types of packages come out, I mean, the more the better, and the sooner the better. So hopefully that actually continues. We'll see what Congress does. Now, next up, we're going to talk about the repo market, the shadow banking system, and then he's going to talk about the Ford stock, which was, I had no idea about this. Let's take a listen.
Commercial real estate is crashing. Debt is going to pile to the ceiling. That's the shadow banking system. And when I talk to even my highly educated friends, they don't know what the repo market is. They don't know what commercial paper is. They don't know that Ford went from triple B to junk. They don't know. They say, oh, what's the stock market doing today? They don't know, Patrick. So that's why I created the cash flow board game. I wrote Rich Dad, Poor Dad, and all this. So people have got to start teaching people. Positive thinking is stupidity. If you're broke, you've got to have something between this year and that year. You've got to know assets from liabilities. You can see the balance sheets. That's all I'm saying. I've been saying it for 20-something years now.
So here's a question for you. If you're saying you don't know what to say, if you're saying there's no solutions, if you're saying pensions are going out, which, by the way, I'm in the industry. We've known that for a while with pensions and Social Security. Robert, why should anybody buy your books? Why should anybody buy your books right now if you're thinking doom and gloom, if that's around the corner?
Because, Patrick, you know the answer. Please. Out of 100 people, 4 will get the message. You see it every day in your work. I see it every day in my work. I see all the positive thinking guys. Oh, I just think, don't worry, be happy. Go to Margaritaville. Look at the millennials. They're the biggest in-debt generation in history. Look at what we've done to our kids. How much financial education do our schools put out? 0. Is that an accident? That's all I'm asking people to think. But all these guys who are positive, I don't have to worry. My personal trainer, they're unemployed now. He says, yeah, but we're very successful people. I said, but you know nothing about money. So some people will get educated, 96% won't. That's the odds.
So there's still an out for people to, throughout these times, capitalize and create wealth and take care of their own.
There's a difference between money and long-term wealth. Look, I don't know if you know this, but I don't have a financial planner.
That was actually the last piece I wanted to go over. It was a long piece, but that last piece where he talked about there's a difference between money and wealth. And when you think about it, all the different people, I mean, you here listening to this video, when you got into cryptocurrency digital assets, I'm sure it was the same reason I got into it, which was just to, there was a good amount or a good chance that this asset would increase in price. You thought it was a good investment. But then as you looked at it and you really, delved into it and researched, and I'm sure I'm not the only channel you listen to, maybe, or the majority, or some of you, I don't know, or are you listening to this channel right now, you've understood that that all these things that are happening in the world that some of these digital assets, and whatever you believe is going to take place, but one of these is going to help the entire monetary system, because I don't think that money or cash or fiat is going to be, around forever. And I see how Bitcoin can do a lot of great things. I see how Ethereum can do fantastic work. I see how XRP can do well. I see how Cardano. I see how Tezos. I see how EOS can actually do these things. And it's just like one of those things. For we are not building cash or money. We are building wealth for the future. Now, it's not realized right now, but I think as time goes on, it will be big. All right, so before we move on, there's a fact check, because he talks about the Ford stock being junk. I didn't believe that, so I took a look real quick, and unfortunately, he was right. So Ford's credit rating cut to junk status by S&P Global. This is from March 25th, 2020. On Wednesday, credit rating agency S&P Global cut its rating of automaker Ford to junk status, and it went from something like, they rated as a triple B minus, its lowest investment grading rating, to triple B or double B plus, its highest junk or non-investment grade rating. So at least you can say I'm the highest junk. So great. All right, and the last piece here, which is very quick, we're going to talk about what his advice is overall, and then we'll get into what I think here.
You know that, I know that. You take that money away. What has happened all over the world, like in Argentina, Zimbabwe, Venezuela, they're going to riot. You know that? I know that. I love Australia. The Aussie dollar dropped from 80 to 55 cents. I say that to average person, highly educated, stupid people like my rich dad, my poor dad. So that's why I do what I do. So the question I ask the people who are watching, here's to get out before that, or it's called wipeout. And millions right now, Patrick, you know it and I knew it, are being wiped out as we speak. As we speak, as Buffett said, people are swimming naked. They're going to turn in the keys to their Lexus, their condos, their second house. My friends who are in commercial real estate, they're hurting, man. They were rich, but their tenants are moving out. Retail, restaurants. And I don't think that was a mistake. I think the coronavirus is a cover-up for the September 2019 crash of the repo market. And it's in Who Stole My Pension. And the average person I'm talking to right now, they don't know what the repo market is. They don't know the shadow banking system. They don't know commercial paper. They don't know any of that. That's the problem. And that's what I've been saying. Like I said, I was cruising along here. I saw this wave building. So as a surfer, I go, okay, something's coming. It's no longer a short break. This one's big. And that's when right here, I wrote the cash flow board game, Rich Dad, Poor Dad, and Prophecy. I said, this is coming. So you go to richdad.com. You can see me on CNN. In January 2008, I'm telling Wolf Blitzer, Lehman is going down. And he got upset because it got out. It's not supposed to get out. Just like the coronavirus out of Wuhan was not supposed to get out, supposedly. But once it got out, then they never invited me back.
So interesting stuff. So here's my thoughts. Robert, you have to take this with a grain of salt. Robert here, he's been talking. Actually, he's been talking the same thing for quite a long time, and he is a great guest, and he's very entertaining and those type of things. So you have to say, well, how much is that is the truth? I know he believes it. My question is, do you believe it? Do you think that there's going to be riots in the streets and we're going to see the hugest economic downturn, is going to be everything's awful? Or do you think it's actually going to turn around? So just let me know in the comments below, and I always take a look at those. But for me personally, it's just too risky right now. Like I have a a big stash of cash waiting to pretty much go in at the right moment. And I cannot time this correctly. I feel like if I go in now with everything I got, because I mean, it's still pretty low. It's not like the $3,900 at $4,500. But if it's, we're at $7,200 right now, who's to say that just like we saw with these trends, how there's like a little bit of a recovery and then boom, it crashes down. A little recovery, boom, it crashes down. Who's to say that it's not going to really evaporate? And then now I'm stuck short. So I can't do that. So for me, the safest thing that I'd like to do is I'm going to dollar cost average, the same thing I've been doing since 2017 actually. 2017 I did I went in all in when I shouldn't have. And that was during, I got a little FOMO action. But now it's just been dollar cost averaging over the last 3 years. So I'm not going to change my my strategy. It's just the safest thing to do for me. Now, what Robert here is saying is get out of the market. And then somebody in the comment section said, well, how is that possible? That's stupid. I have a 401k. If I took everything out into cash, I would pay huge penalties. And who knows what the market's going to do? Because, I don't know. I mean, you don't know. No one knows. And anybody who says they know is a liar. They have no idea what's going to happen. They just have educated guesses. We're in uncharted territory. So, like for that person and for people who are thinking, hey, I got a 401k, I don't want to see it lose a ton. There was a video that I watched with the digital asset investor, and he was talking about it was an IRA, a Bitcoin IRA. I took a look at his channel, and I found it, and it's from a company called I Trust Capital. Now, this is not a sponsored spot. I have just watched the video with Digital Asset Investor, and it seemed pretty interesting. And I know with 401k, you can roll over to an IRA. I don't know the actual specifics. I'm not a CPA. Talk to your accountant. But it looked very interesting, and I saw some pricing, and it looked pretty reasonable as far as the setup and whatnot. $30 a month plus 1% trade or whatever they're going to do. So I'll put that in the description. So that's one option. I wouldn't say. I mean, if it was me, I wouldn't take everything out. That would be kind of goofy. But maybe you want to do some of it. I don't know. I don't know how exactly that works, but maybe it's an option for you. And so that's it for that video. What I'm going to do now is let's do a little bit of some positive stuff. And lastly, let's have some fun. We're going to go over a crypto analyst who called the massive Bitcoin crash. It says Bitcoin targeting 400,000 in extended boom and bust cycle. Now again, everything we just heard from Robert Kiyosaki and all the negative things that we've heard about, we don't know how long that could last if that actually does happen. So when I see these types of articles, I want to get a little positivity at the very end. Finish off on a high note, I guess we'd say. So this was he made a prediction July 11th of last year, and this was when Bitcoin was 11,600. He said that it would go to 6,000, and the low point was 64.25 in December. So, okay. So here's his next predictions. This is from Dave the Wave. Jesus Lord. Can we get some better names for people who are doing analysis? It's just every time I say a name like that, I'm like, oh, this seems legit. And it's Dave Pumpkin Popper. I'm like, what the hell? Anyhow, so he predicts Bitcoin will spike to around 110,000 at the end of 2022, followed by a crash to a low of 30,000 in 2025. Wow, I'll take that. I'll take 110,000 in the next 18 months. After that, the analyst believes Bitcoin will begin a long-term grind that will end at around 400,000 in 2029. Let me ask you this. What do you think about waiting 9 years just to see a 400,000 Bitcoin? Could you do it? Could you hold on that long? But in the short term, economist Alex Kruger says Bitcoin may push from its current price of just over 7,000 to 7,700, which he's pretty much right on point right now. But after that, he's expecting another retracement to $6,400. Kruger warns Bitcoin appears to remain closely correlated to traditional markets, and all bets are off if the stock market takes another beating. He states Bitcoin's price action would depend on what stock indices do. Bitcoin continues to trade like a risk-on asset. Rolling correlation between Bitcoin and the S&P 500 remain around historical highs, and I couldn't agree more. It seems like it really looks to be correlated with the market. It seems like Bitcoin goes up and the market is going up, or the market goes up a little bit, Bitcoin goes up, or the cryptocurrency market in general goes up. So I think last week was a pretty good week. And then what's happened with the crypto market? Looking good too. So here's my final thoughts. Again, it's too risky. I'm not going to dump a bunch of my money into it right now. I just can't. And we're in uncharted waters. I mean, we've never been here in this type of situation. We know that there's cycles as far as the Bitcoin halving, which is coming up on May 12th, 2020. So we can kind of chart those out to big bull runs, but to throw in a huge pandemic that's locked down much of the world's economy, it's anybody's guess. I can see it. It's has a rosy picture in the future. Just don't know how close that future is. All right. So that's it for today's video. Went a little long. Sorry about that. But if you like these videos, there's going to be a couple on coming up on your left and right. Go ahead and check those out if you got time. And that's it. So enjoy your weekend. And thanks for watching. See you on the next one.